Eric Muathe with Muathe.com. Let's take a look at another way of looking at the same chart and with the same idea of line extensions. So I'm going to draw a couple of lines. Let's go to this breakout or breakout here. So once it broke out there in 2006, we can see that there was a good reaction. The stock went higher. Now if you extend the same line, extend it, you see it coincides with the break here off the highs in late 2007, and of course we go lower, substantially lower, extend the same line, and it becomes, now remember this is oversimplification. Of course you have to see whether there are other time frames. Here this is all data monthly, so in reality you'd have to get confirmation in other time frames, but you can see here good evidence of moving above that line for this entry, and of course the stock has never looked back since then. So that's one line. There's another line also as we continue studying this chart, and it is this line here, somewhere there. So this line connects the highs here, here, and then this little blip right there. And so what happens is we break out above that line here for this entry in middle of 2012. That's good. So let's extend the same line. Remember, the idea here is that we need to be extending our lines as best as we can, and so there we have it. And so we can see after moving above the line during this period here, the next time it reacts to the line is this break, and once it breaks below that, you see we come off the highs somewhere here, and we haven't been back to those levels since. So we can see the stock kept the memory of that line many years even after the fact. There's one more line connecting the lows here in early 09 and this double bottoms support line. So let's extend that out, and it should look something like that. All right, now take a look at what happens here. We move below the line here for the highs right there, and again we get this short-term blip. The stock recovers back above 69.1 here, and eventually has a backtest failure right there at the beginning part of 2015, which happens to coincide with the all-time monthly closing high. Of course, since then, since this resistance and this backtest failure with the line extension, the stock has drifted lower. So this is a simple way of looking at it, but remember you want to always confirm this by taking a look at other time frames. So just to keep things a little bit relevant, in the current market environment, those who own the stock can keep tabs of this line, because let's say the stock moves on and eventually finds resistance here and stalls, that would be a sell signal. At the same time, if the stock can move above that resistance line going back to 2007 here, if the stock can clear this blue line down the road, that might be good enough to start another up leg. Otherwise, for now, we don't know how it's going to respond, but we need to keep that line on the chart as a future reference point. The higher the stock goes, the more it might come back to this level to make a decision as to whether it is gonna blast above that line or whether it's gonna hit resistance and start pulling back. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Mwah. Woo! Yeah.